Good morning, everybody, and happy Tuesday. It's April 22nd, and it's going to be a busy day in the markets once again today, I am sure. So let's get started here in just a couple of minutes. If you guys can hear me okay, as always, just give us a quick confirmation in the chat box. That would be awesome. And then we are going to get started in just a minute or two. Perfect. Thank you for the confirmation. Okay. All right, let's get started. Good morning, everybody. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call or morning show. And I think this is going to be another important week here. I just had a couple of calls late last night and this morning as well, kind of going through the roadmap. So I'm going to walk you guys through the top things on my notepad here this morning, which are the following. I do want to talk about gold. I actually personally, from my personal account this morning, started hedging my gold exposure. That's a long-term allocation. I'm hedging it with gold futures. Then we do want to talk about a little bit more about gold and some seasonality that typically will get people's attention. It's an oversimplification, but nonetheless, dollar index is oversold at the same time. Bitcoin, we got a new buy signal. And then we'll talk about the VIX as well. So it all kind of marries together. Where to start? What you're looking at here is something that most people don't care about. They don't care about learning it. They don't care about studying, which is why most people fail. This is something called the yield curve. And I'm going to continue bringing it up because it is actually very important to understand what this tells us. And so let me close the window here. And so what this yield curve tells us, and we've been doing this show now for, I'm going to say, probably 3/4 of a year or so, maybe a little bit less. What this yellow line represents is the steepness of the yield curve. If you look at this and you look at the y-axis over here, you can see the zero line is there. That basically means that the difference between 10-year U.S. Treasury notes yields and 2-year note yields, what the difference in yield is. And when that yield is negative, it means that the yield curve is inverted. When the yield curve is positive, it is right now, it means we have a regular yield curve where longer dated bonds yield more than short dated, because of course that makes sense because borrowers, creditors need to be compensated for that uncertainty risk time. So it's sort of a risk premium. What this really means, and I know, again, most people don't care about this, but it's incredibly important. You need to understand what this means from a borrowing perspective. So essentially what it means is that we're probably at some point going to get to a point again where borrowing will become a bit more affordable again on the short end, but less so on the long end. And so when you take yield curve analysis into cyclical analysis in terms of the economy, then I would argue that we're probably closer to a point where the Fed might make a shift and start cutting rates than we were. I mean, this is kind of a stupid thing to say. It's obvious than we were, even 3 months ago or 2 months ago at this point. So it's important to watch. It's important to be aware of that the yield curve is now steeper. It's a very different environment that we had for a couple of years coming out of COVID. So that's that. Now, let's talk a little bit about gold. And this is something that hasn't happened in an extended period of time. So I'm going to share with you what our Vertical X Pro is giving us this morning. So for all of you guys that use the Vertical X Pro, gold, both the GLD ETF and the IAU ETFs are giving us Vertical X Pro extreme short-term overbought signals. That does not mean, so this is really important, right? So we have to make sure we keep our timeframes proper. This does not mean that gold's rally is over through the lens of like multiple months, multiple quarters, multiple years. It does mean that the rate of change, according to our indicator, on the upside is probably getting exhausted. It also doesn't mean that gold can't go another penny higher from here. That's going to go straight down. That's not what it's telling us. What it's telling us is the rate of change is slowing down and that the odds ultimately of a mean reversion move in gold are quite high. Bank of America just came out with a survey, I believe, last week or the week before. Gold is now one of the top ideas, top bullish ideas of fund managers. So I think we're getting frothy in the short term. You can also use like traditional indicators like relative strength index stuff, which is, again, it's all a bit benign and a bit too overly simplistic, but I'll quickly show you this as well so you can kind of see this. And by the way, if you do analyze gold, you have to use the ticker symbol XAUUSD. Otherwise, you're just you're not analyzing the underlying. So, but if you want to use traditional technical analysis, like your moving averages and that kind of stuff. So we are certainly overshooting here. We're potentially at a spot where we could be leaving behind a pretty gnarly exhaustion candle today. Again, that may be a bit of a tough call to make at this point because that's very near term. But we are, according to the Vertical X Pro, which is our proprietary indicator to tell us when something's extremely overbought or oversold, we are there at this point. So I'll quickly share this with you on this chart here. So we'll take it here. Here. Okay. We actually already were there a couple of days ago, so now we're stretching even more. So I think it's a good a spot as any to be a bit wary of gold. Again, that's a near-term call. So what I did personally, I've been long gold, as you guys know. I've been making a huge deal about it here for the past year and a half. We got long gold in pretty good size in the sort of midpoint, a little bit past the midpoint of 2023. So around, I'm giving you this for perspective, right? And then we'll talk about the seasonality part. So somewhere around here, we ended up getting long gold. It's been like an 80% rally now. So, I'm very happy. I'm not selling any of my long-term gold. I think gold can go to 5,000 or more in the coming years, but I am hedging it now because it's getting quite steep. And even if you were to do some very overly simplistic analysis and say, you know what, the rally from 2018 into the COVID high was 80%. So that's this line here. And the rally from where this rally started to where it is right now is like, also 80%-ish. You can kind of, again, it's overly simplistic and I don't want anyone to hang a hat just on that, but that's interesting. So we've got sentiment getting stretched. If you look at all the chart chasers and, 25-year-old YouTube clowns that are now making gold their thing, they don't even know what it is or how it works. They just know they have to sell, a few clicks. So they talk about gold because it gets clicks right now. When you look at all that and how typically dead wrong they are, and you take this into account, and you take, again, to me, most importantly, is the Vertical X Pro indicator telling us we're getting very stretched right now. And then you can take some seasonality stuff into account as well, which I'll quickly share with you here. Let me quickly bring up a seasonality chart. here. Okay. Now, and again, I always say seasonality is something that you have to take with a grain of salt. But and I know a lot of people like to follow seasonality because it's an oversimplification, and people like shortcuts. The problem is shortcuts in trading and investing blow up accounts. So don't do shortcuts. Do your work. It's just like trying to cheat on a workout, right? Doesn't really work in the end. And so if you look at this from a seasonality perspective, May and June are typically, actually down months on average for gold. Now, again, we're in a bit of a different cycle here, so you could get an overshooting, which we may be getting right now. But that's kind of it. So I don't think so. Like Thomas is asking, is it a crowded trade? I actually don't think gold is a crowded trade. I think it's a crowded sentiment trade. Most people, and you guys can ask yourself this: do you own any gold? I'm sure the two people that do own it are going to say yes, I do, and make a big deal. Most of you don't own gold. Most of you don't own nearly enough gold if you consider the fact that gold beats the S&P over time, which is quite incredible, right? So I don't think people own gold. I think the sentiment's getting frothy. And so there may be a trading crowd, but there's not an investment crowd. So again, I can't give you advice here. This is educational. But what I would be really seriously considering is any pullback we get. If we do get one, again, full disclosure, I own gold. I've been very public about this since the midpoint of 2023. I've hedged it this morning in the futures market. So I'm not selling my gold positions. I'm simply hedging them because I do think we could easily get a 20% correction at some point. So if you're wondering what that brings you to, a 20% drawdown here gets you to somewhere around, maybe 2,800 or so, maybe 2,700. I think that's entirely in the cards. If the move starts to happen. Now, what would be the trigger for this? Well, again, we talked about this yesterday here. The dollar index, to me, is getting quite stretched on the downside. So if the dollar were to have a rally, and I don't know what the news trigger is on that, it may be something out of the White House, maybe something different, I don't know. The dollar could start to catch a bid. That would probably get gold to mean revert quite quickly, because that inverse correlation is currently about 0.8, right? So you're wondering, what about a trade? Serge, I just want to make a quick trade today and then go back to work. First of all, wrong attitude. Stop trading. Go get a job. Number one. Number two, if you do want to trade and you actually want to sit in front of your computer and actually do work and be serious about it, then there's probably some tactical stuff here on buying gold or on being short gold for a trade or being long the dollar. From an investment perspective, I personally am waiting for pullbacks. If we get a 20, 30, 15, 20% pullback in gold, I'm happy to buy some more from an investment perspective, not from a trading perspective. So that's gold seasonality. So that's about three things already that we're giving you here: gold, dollar correlation, gold seasonality, gold sentiment, right? So hopefully this is helpful for you guys. Give us a thumbs up if you're finding this helpful. And then we do need to talk about the VIX, and then we'll talk about Bitcoin because we're seeing something. And if you are a Trender member, you are going to get an email this morning on this shortly. Let's quickly talk about the VIX. We keep talking about the VIX when it's between that sort of 20 and 30 area. It's typically in a heightened volatility phase. We made a big deal about it here in our morning show when again, the Vertical X Pro indicator, which is the same one that's now telling us that gold is overbought, told us very clearly that the VIX was overbought. You might recall when we talked about that, and this was right there. You see how it got overbought? And we made a big deal about it. So gold was very overbought. We made a big deal about it. The VIX was overbought, and that's exactly when equities started to bounce off the lows. So, having an extreme overbought and oversold indicator, and no MACD, RSI, stochastics are not good enough for that. Just to be very clear. So, if you want our Vertical X Pro, just reach out to our team, and they can make sure that you get access. You can access to it for a small stipend. So that's what's going on in the VIX. It remains elevated. It's not in the teens. Look, it's possible, but I have a hard time imagining the VIX goes below 20. I think it's going to remain in the low to mid 20s, maybe higher. I don't have a trade on the VIX. What we did in Trade Ops, which is our members areas, we actually sold credit spreads So we actually did bull put spreads in the S&P 500, which was a bet of volatility coming in. So as volatility came in, we were able to make like 20, 30% of gains just because volatility came in, because options became cheaper. So we were selling options. So if that's the kind of thing you like, make sure you join us on the inside on that. Lastly, let's talk about the Bitcoin price. We talked about it yesterday, and again, I know Bitcoin's not for everyone, but I do want to show you what's going on. If you are watching this, to me, this is a pretty material move that's taken place here in Bitcoin. Bitcoin's actually still neutral in the long term, multi-month, multi-quarter trend on our end. It's not yet like a new bullish trend, but because it's still where it was basically just a few weeks ago, but there is new bullish momentum. So for those of you guys that have the trender indicator, what you want to do is you want to go look at Bitcoin. I'm going to show it to you here. We actually did receive a new trading signal. This is a momentum indicator, okay? A buying signal in Bitcoin. That's BTC. You saw we received it in gold, and Bitcoin so far is up 6%. Same thing in IBIT, which is of course an ETF that tracks Bitcoin. So if you're using the trender indicator, we are sending out a fresh trading signal this morning on Bitcoin. Remember, we had a sell signal in February. Bitcoin then crashed about 22%. We're now getting a new buy signal in Bitcoin from a trading perspective. And be very clear, it's a trading call, not an investment call. An investment call, if you receive the Bitcoin brackets every Monday, we're still neutral. But again, I do think that could change over time. So want to be watching that very carefully. With that, I have to go over and do our member session for Inner Circle members. We've got a whole lot of stuff that's setting up on the bullish side, believe it or not, on the Market Rover. So I'll see you guys over there. And then we are going to do our second day of our boot camp, which starts at 10 o'clock. So that's in about 40 minutes. So if you're joining us in the boot camp, we get a great day set up today. We're going to go an hour, hour and a half. And go through our portfolio that has been beating the S&P and is actually up on the year as opposed to the S&P being down, which is unbelievable for that kind of portfolio. So we'll see you guys over there. In the meantime, have a great day, and we'll also be back here tomorrow morning. Please, 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 very important, give us a thumbs up, like. Please subscribe to the channel. It's very important so you get updated in real time when we go live, and so that we can continue doing this morning show. Thanks so much. Thumbs up, like, and we'll see you.